Have you ever wondered why every economic crisis feels like déjà vu? Why the system breaks in the same places, for the same reasons, while the same people somehow walk away richer every single time? There's a reason for that. And it's far darker, far more controlled, and far more intentional than anything you've been told. Because behind everything you see, interest rates, inflation, stock market surprises, political promises, there is a hidden architecture, a sealed vault, a command center of the global economy that even most economists will never get access to. A place where the rules aren't written, they're engineered. This is the financial black box. And once you understand it, you'll never look at a recession, a boom, or a unexpected financial shock the same way again. And here's the part they really don't want you to know. You've been living inside this black box your entire life. You just couldn't see the walls. Not until now. The illusion of a free market. We're taught from childhood that the economy is guided by simple forces: supply and demand, competition, risk and reward, healthy cycles of growth and correction. But if that were true, explain this. How do the same institutions create every bubble and profit from every collapse? How do we have once-in-a-lifetime crises every decade? How can markets rise while the real economy collapses? Why is inflation unexpected every single time? Why can't even Nobel Prize-winning economists predict anything accurately? Because they aren't allowed to see the machinery behind the curtain. The financial black box is not a metaphor. It is a real, insulated, protected layer of global finance where monetary policy is shaped before it's announced. Liquidity is allocated before crises begin. Markets are guided long before the public knows there's a problem. Entire nations are positioned, leveraged, and steered like chess pieces. This system doesn't react to the economy. It directs it. And once you see how it works, everything suddenly makes sense. The first shock, the economy. You see isn't the real economy. You think the economy is jobs, businesses, real estate, GDP, the stock market, trade, government budgets. But that's just the surface layer, the layer designed for public consumption, news headlines, and election campaigns. The real economy, the one that actually determines the future, operates in shadow structures like euro-dollar markets, shadow banking liquidity pools, private swap networks, derivatives webs larger than world GDP, black screen trading terminals you'll never see, private lending markets that dwarf central banks. This is the machinery underneath the floorboards. It is invisible by design, unregulated by design, unaccountable by design. And here's the punchline. This system wields more power than every central bank on Earth combined. When politicians talk about fixing the economy, when economists model inflation or growth, when the media pretends to explain markets, they're all talking about the visible economy. The financial black box is the one actually controlling everything. The golden rule of the black box. Risk is never destroyed, only transferred. Everyone thinks the 2008 crash was about subprime mortgages. It wasn't. Subprime mortgages were just the spark, the dry brush, the excuse. The fire was caused by something deeper, massive, hidden leverage buried inside the black box. Leverage so opaque that not even regulators knew who held the risk. And when the system began to fall apart, notice what happened. Banks got bailed out. Executives got bonuses. Hedge funds feasted on discounted assets. The Federal Reserve opened emergency liquidity lines. Ordinary people lost everything. Risk didn't vanish. It migrated away from institutions, into your life. Lost jobs, lost homes, lost savings, lost futures. That wasn't an accident. That was the architecture of the black box, doing exactly what it was designed to do. Privatize gains, socialize losses, a perfect machine for the people who built it. The second shock. The Fed isn't in control, it's in reaction mode. People talk about Jerome Powell as if he's the wizard behind the curtain. But inside the black box, the Fed isn't the wizard. It's just another lever. Every interest rate decision, every emergency facility, every unexpected pivot is not proactive, it's reactive. The black box moves first. The Fed responds after. Want proof? Look at the last 30 years. The Fed didn't predict the dot-com crash. It reacted to it. It didn't prevent the housing bubble. It bailed it out. It didn't foresee the repo market freeze in 2019. It panicked into trillion-dollar injections. It didn't anticipate the inflation spike. It tried to control it after the system broke. It didn't expect banks to fail in 2023. It had to create emergency programs overnight. The black box made the moves. The Fed scrambled to catch up. This is why the system always surprises economists. They're analyzing the wrong layer of reality. The third shock, you are not participating in the financial system, you are feeding it. This may be the hardest truth to accept. Your role in the financial black box is not to benefit from it. Your role is to sustain it. Your savings give it liquidity. Your taxes give it fuel. Your debt payments give it cash flow. Your retirement funds give it long-term capital. Your losses give it stability. You are the power source, not a beneficiary, a participant, a donor, a cog. And that's exactly why economists aren't allowed near the black box. Because the moment the public understands how the system actually functions, the moment people realize how little control they truly have, the entire illusion collapses, and the system requires the illusion to survive. Why you never hear about the black box. You would think economists, the people who study the economy, would talk about it. They don't, not because they can't see it, but because the system actively prevents them from studying it. Very few academic papers analyze eurodollar liquidity, shadow bank credit creation, derivative chains exceeding 600 trillion, private repo markets, dark pools of collateral, synthetic leverage webs. Why? Because these systems sit outside democratic oversight, outside normal reporting requirements, outside everything the public is allowed to know. Economists don't study the black box for the same reason engineers don't study classified weapons programs. They're not given access. And without access, the truth remains invisible. If the financial black box is this powerful, this hidden, this insulated from oversight, what happens when it breaks? What happens when the machinery running the real global economy finally snaps? What happens when the people who built this system lose control of the very forces they've been manipulating for decades? Because that moment is coming, and the signs are already flashing red. The most dangerous moment in any hidden system isn't when the public discovers it. It's when the architects lose control of it. And right now, the black box is slipping. Not loudly, not publicly, but deep inside the offshore liquidity networks, collateral chains, synthetic funding markets, and derivative webs that quietly hold the global economy together. The signals are unmistakable: stress, scarcity, malfunction. A liquidity freeze here. A sudden spike in short-term funding there. A contained bank failure. A bond auction that feels wrong. A foreign currency that collapses overnight for unknown reasons. Each one is a whisper from the machine. Something inside the black box is breaking. And when a system this interconnected fails, It doesn't fail gradually. It cascades. Because hidden structures don't crumble in slow motion. They snap. The dollar shortage. A paradox only the black box can explain. For years, the public was told the Fed printed trillions. So dollars should be everywhere. But ask foreign banks, emerging markets, multinational corporations, and sovereign borrowers. And you'll hear the same crisis-level warning. There aren't enough dollars. How can you print too much money and still have a shortage? Simple. The Fed prints domestic dollars. The black box creates and destroys offshore dollars. The ones powering global trade, foreign lending, derivative settlements, and sovereign financing. The domestic system is a pool. The offshore system is an ocean. And the ocean is draining faster than the pool can refill it. When offshore dollars disappear, entire nations start to suffocate. Sri Lanka, Turkey, Argentina, Pakistan, Egypt. These aren't random failures. They're warnings that the oxygen supply of the black box is thinning. The collateral break. The black box's fragile heart. Most people assume money powers the global system. It doesn't. Collateral does. And the most trusted collateral in the world, U.S. Treasuries, is becoming harder to access, harder to trade, and harder to rely on. Some are locked inside central banks. Some sit in long-term funds. Some belong to institutions that never lend them. Others are pledged, repledged, and recycled so many times that ownership becomes a philosophical question. When one link in the collateral chain fails, one fund, one bank, one hedge player who cannot deliver what they owe, the entire chain trembles. This is what triggered the 2019 repo market explosion, the 2020 Treasury liquidation, the 2022 UK pension crisis. Silent near failures in European banks. The world is running on recycled promises layered on top of fragile collateral webs. And you cannot fix a collateral shortage with interest rate cuts. You cannot print collateral. You cannot regulate trust back into existence. This is the black box's Achilles heel. The black box has outgrown its masters. What started as an offshore workaround in the 1950s has become a self-replicating organism. Too big to map, too complex to predict, too interconnected to contain, too algorithmic to manually steer, too leveraged to unwind without destruction. Even the BIS, the secretive institution that oversees global liquidity, admits it cannot track the total obligations inside the black box. If the BIS doesn't know its size, then nobody does. Imagine flying a jet through a storm with no instruments, no map, and no functioning navigation. That's the global financial system today. The next break will be sudden. History doesn't repeat, but the black box does. 1929, liquidity vanished overnight. 1998, one hedge fund nearly collapsed global markets. 2008, hidden leverage detonated the world. 2019, repo markets froze in hours. 2020, the Treasury market broke under stress. 2023, regional banks snapped with no warning. Every time, the black box cracked first. Every time, central banks scrambled after. Now the red lights are brighter. Collateral scarcity, dollar shortages, excessive synthetic leverage, sovereign debt instability, FX pressure, derivative exposure, failing auctions, silent bank stress. When the next break comes, it won't look like 2008. It will be faster, more complex, less visible, but far more consequential. Because this time, the black box is larger, and the safety nets are smaller. You live in the visible economy, but the visible economy is just a projection. The black box dictates your interest rate, your mortgage, your retirement value, your currency strength, your job environment, your investment returns, your financial stability. Most people operate blind. They trust headlines instead of mechanics. They trust narratives instead of data. They trust institutions that don't even understand the forces they're trying to manage. But you've now seen behind the curtain. You understand that the biggest risks are not in stock charts or political speeches. They're in the invisible engineering of global liquidity. And once you grasp this, you stop expecting politicians to fix the economy. You stop believing central banks control the system. You stop relying on traditional advice written for a world that no longer exists. You start preparing. You start positioning. You start protecting yourself from the shock the black box will unleash. Because the question is no longer if the system breaks. It's where you'll be when it does. If this opened your eyes, subscribe. Because understanding the black box is the difference between being blindsided by the next crisis or walking into it prepared. Share this with someone who still thinks the Fed runs the show, and let me know in the comments, where do you think the next fracture will appear?